A couple of days ago, you thought the sky was falling. Now everything seems to be just fine on Wall Street. Welcome into my state of mind. I am Dan York. I mean, your state of mind, if you're following the markets, is probably all over the map, just like the market itself is. I don't know what I'm talking about when it comes to this stuff. I think I proved that twice this week when, during the rundown, I made a remark about the current status of the market, only to find that I missed it by 400 points in 15 minutes. It's just crazy that way. And for those of us who actually count on it as a source for our retirement income and financial security and all of that, it's been kind of, well, it's another reminder that things are not always steady and upward. But we will discuss that tonight. Oliver from the Money Pros, a show you see on Fox Providence on Sundays here at 11:30, will be my guest to talk about what the heck happened, what's going on, what you might want to do. Hint, hint, stay in. That's my advice, but we'll get his coming up. It's great to have you aboard. Reminder, 7:30, 11:30 on MyRI TV each weeknight, and now on Fox Providence at midnight. 3 chances to watch this show. Let's go to the rundown and take care of some of the things that are on my mind. And I don't understand the collective psychology of the media and the press sometimes. The poor mourning father of this young lady who lost her life live on television, I can't even imagine that I'm saying that, was like on the circuit yesterday and today. Headline here for Mr. Parker there talks about his vow to be the John Walsh of gun control. The video that you see here is him speaking with CBS. I don't think there's a network that he didn't spend some time with. This is all on the day of and the morning after this incredibly violent, evil, tragic event. And while he looks like he's got it together, and he has vowed to be the John Walsh of gun control, after watching him 3 minutes on CNN this morning, I just felt nothing but, I just want to give the guy a hug and say, stop, 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 take a breath, and be with your family. Vowing to be the John Walsh of gun control, in a 3-minute interview, he said nothing about specifically what he would want to see done for gun control, other than these people who would what? Do evil things like yesterday, shouldn't be able to get guns. Well, I get that. And he vows to be in the fight until the end, but he doesn't know what the fight is about. I think sometimes the media needs to take a little bit of a collective responsible break. A hard and fast rule, there can't be a law. I'm not about regulating, but a little bit of conscience to say, you know, there's some people that you really shouldn't be talking to for a while after they receive some kind of traumatic news like that. Doesn't that make any sense? I mean, we collectively decide that we're not going to publish the names of rape victims. Why can't we make a collective media and press decision not to penetrate that very tender psychological circle, at least for a while, no matter if they want to or not? I'm just praying for the guy right now and his whole family. Joe Biden's also had some trauma too, right? But as he's been very quiet, his numbers are climbing through the roof, and the calls from Democrats who think that Hillary Clinton's going to crash and burn are coming at a more furious pace now. The Quinnipiac poll has Joe Biden in a pretty good spot, one-on-one with Donald Trump. He'd beat Donald Trump by 8 points, the poll says, and Hillary Clinton would only beat Donald Trump by 4 points. There's a very big difference, though, between a national poll of potential voters on a wide scale and primary politics. Joe Biden has 18% versus Hillary's 45%, and Bernie Sanders stuck there in the middle at 22%. Hillary Clinton's going to be focused on Super Tuesday in March. That's where she's going to make all this thing work, unless, of course, she gets indicted. If she gets indicted, Joe Biden skates through and becomes the nominee. Joe Biden may not actually announce he's going to run for the presidency until such time as he hears more about what legal problem Hillary Clinton has. And believe me, he's got an ear to the ground and a pipeline to that news. He also told Democrats in a teleconference yesterday that he's not sure if he has the emotional fuel to make this happen because he's had a trauma. He lost his son to cancer recently. I think he should listen to that instinct, because running for the presidency, as he knows, takes everything you've got. And he may not have it to give, and that's not a criticism. Speaking of giving, Trump fundraiser coming up tomorrow. Ernie Bach Jr., the car guy, is running this fundraiser, expecting 500 people. A couple of weeks ago, Kim Kalunian from WPRO talked to Ernie about the turnout he expects.
You have an invitation. That means you're on the list of guests. If you come across an invitation and you RSVP and you come here, and even if you want to pay the $100 donation, if you're not on the original list, then I just can't let you in because of many reasons: security, capacity. So it'll be a fun event.
How many people are you expecting to attend?
I would say north or south of 500.
So that at $1,000 a pop, that's $500,000. Now, Donald Trump says he's not going to take anybody's money, but I don't think Donald Trump thought he was going to get this far, this deep, this competitively on such a free ride. Do the math. Donald Trump reportedly has about $300 million liquid in his portfolio. Well, ask Oliver what he could do with that in terms of an investment client. But you know, he might be worth $4 to $8 million, but it's not all at his fingertips. You know, do the math. I mean, you might have equity in your home, but it's not necessarily something that you want to tap into, right? If it takes $1 billion to run a presidential campaign and you're capped out at $300 million liquid, somewhere along the line you're going to have to say uncle and go back on your word and take the money. It might be a smart thing for the Donald to start in Norton, Mass. tomorrow night. We'll see. By the way, if you're not on the list, don't go crashing the party. Ernie doesn't have the space. The Paw Sox alternative site is coming back into a discussion. I told you originally, me first, I'm not big on that exclusive me first stuff, but I told you about this piece of land. Here's a headline in the Providence Journal that ran yesterday. The Larry Lucchino dude, you know, the president of the Red Sox, resigned, and now the chief guy of the Paw Sox new management stopped by this site. Now, if you're wondering about it, let me just first set the scene. The late Jim Skeffington, God rest his soul, was here on this show prior to his unexpected passing, and I asked him about this site because I had talked to an economic development guy in Rhode Island about it, and he was saying, Dan, you got to check out this other site. What about Point Street? When I take 195 and I come up 95, there's 6 or 7 acres of land. I had an economic development guy in the state say, hey, Dan, you ought to take a look at that property for those guys because that might work. And or Allen's Avenue. Have you thought about those other Providence options?
We have looked at all the options that we're aware of in Providence, including those two. And we've concluded that that's not an appropriate site for our ball club. We think we have better options.
Well, all due respect to Jim, God rest his soul again, they're looking at it because these neighborhood meetings that they're doing are not going very well. Now, where's the site? We'll show you the map right here. Easy. Okay, the proposed site right now for the 195 redevelopment land is on top there, right? The Victory Place site is on the bottom, and more. Let me see if I can. So if you're going 195 to 95 north, see 195 on the right there. So you're coming under the city. And as you go underneath the city and get onto 95, that very slow interchange during rush hour, you can see this land directly over your right shoulder. If you're coming up from 95 south, you kind of almost drive into it on 95. That's actually a foot of the city, bright light, better option, I think. Now, it doesn't have balls going into the water like the proposed site at 195 does, because they want to see the outfield into the river. But you know, this could solve a lot of issues. That thing's for sale, and it already has a tax agreement with the city of Providence that's palatable to the city. Unfortunately, Larry Lucchino, when he was caught by reporters there yesterday, had to admit that he didn't know that deal was in place. Who is advising these people, and where is the intel? And by the way, where is the second offer that the Speaker of the House is seemingly hiding? Stay tuned. This might be the place. And 10 years ago, Katrina hit. That's a decade ago. Can you imagine? You know, there's a lot of retro specials and, you know, remember the Katrina type of stuff all over the airways over the next few days. It's worth taking a look. The sad thing is that all you have to do is some cursory research to find that the safety of the city is not all that much better than it was prior to the storm hitting. So pray that Mother Nature stays away. Your state of mind is important to us. 228-1886, state of mind at MyRideTV.com, Facebook post, tweet, you know how that goes. We have a post from last night, reaction. Nancy writes on Facebook, we met Kevin in various places in the world, an amazing man with a great talent, referring to Kevin Briggs, our guest last night, who has this really amazing art project where he's taken photos of people who would be stereotypically identified, used all sorts of crass words across the photo, and it's a real conversation maker, and gave us quite a lot of pause. Very talented guy. Gallery 7 Maynard, gallery7maynard.com is where you can see the photos. All right, when we come back, can we make any sense of these numbers? We'll see. Stay with us. So I don't know if you remember a couple of nights ago, I said, hey, you know, it's going to be up and down, don't sweat it, and, you know, it's up a couple hundred. And, of course, don't tell anybody, but we record the show late afternoon before the market closed, or just about the time the market closed. Well, between the 15 minutes that we produced the show and got the show on the road, the market had fallen another 400 points, and it was 200 down. That's the last time I make market commentary in terms of numbers on this show. So I'd rather go to the pros. On Fox Providence at 11:30 Sundays, you see the Money Pros, and Oliver Tutt is the guy that runs this operation. You can make more sense of this than I can, right?
You know, I think my crystal ball is as faulty as yours is, so I don't think you have anything to feel bad about.
Wait a second. Don't guys like me go to guys like you to say what's in your crystal ball?
No, I think that's a big misunderstanding, and you know, you got into a broader scale conversation about what's wrong with Wall Street. There's a lot of time spent trying to convince people that we're able to predict this stuff, and the reality is we can't. What we know is that, you know, the U.S. economy over decades has grown, and companies have become more and more profitable. And if you put your money in, many years later, it's going to come out more than what you started with. But in the short term, the sort of technical analysis of where's the market going tomorrow or next week or next month or even next year is really a fool's errand, and I think that's where a lot of people get caught up.
All right. So before we get into the big financial you know, how to advise people about what to do. Tell me what you think is happening right now.
Well, I think it's a couple of things. One, and I've pointed this out several times to clients on air, things like that, is that, you know, a correction is sort of a normal process in the market. The market does not go straight up. If it did, it would be a bank account, and it wouldn't return or give you the returns that it does. It's part of the give and take. It's part of the risk of the market. And a correction usually happens, I mean, if we look historically, on average, happens about every 1.5 to 2 years. Now, the last one we had, and we should define a correction for the viewers, right? It's a 10% decline that halts an upwardly advancing market. So that's essentially exactly what just happened. Last time we had one of those happen was October of 2011. So statistically, it was long overdue. So the market, in a lot of respects, I think, was just looking for an excuse. Now, the excuse this time happened to be China. China's market is a mess right now. Their growth rate, although they still do have a pretty healthy growth rate, is substantially slower than it has been. And given that by many accounts it's the second largest economy in the country or in the world, that slowing of the growth rate has people worried about how it's going to affect other economies, specifically the United States. So that was sort of the nudge that the market needed to go over the cliff. But I'm not sure that was really the reason. I think it was really just a cleansing that may still be taking place at this point.
Well, so let me ask you about your role and your level of candor with clients. Obviously, you've got to be completely above board with your advice. You've got to be macro perspected on the whole thing. But when you're a financial advisor and you've got so many folks giving you money, they want to hear good news, and they want to hear that this money is going to grow over time. And truth be told, it seems that is the absolute truth. But in the meantime, there are all sorts of folks who declare themselves economists or alternative financial planner types who will predict doom. All you got to do is watch Fox News in the middle of the day when they can't sell any ads and they're running infomercials about the death of America, the death of the economy,
sure,
the way this whole thing is going to explode. So how do you approach a little bit of grain of salt analysis of that stuff and a real grip on what you think world economies are doing and how it impacts the marketplace and investing? I know it's a big question.
It's a tricky thing. I often say that the most difficult part of my job isn't managing the money, it's managing the people, and I think it begins with setting expectations. So it really involves talking with your clients, even sometimes before they become clients, when they're prospective clients, and giving them very clear expectations about what you think is going to happen. It's very easy for me to say, look, there's going to be some point where the market goes down. The market may go down 10, 20%. Your account may go down 10, 20%, and saying that that's going to happen. Now, the catch here is I don't know when. So I can't play the game of I'm going to avoid that for you.
But do you think there's some cataclysmic events still lurking here?
In the short run, sure. I mean, the market could take another 10%, 20% hit. It's not out of the question that there could be another recession or financial crisis, although most commentators looking in the market don't see anything on the horizon like what we saw in 2007.
We have slow growth. GDP is slow, but
it's there. And the recent news just today was that the revision for last month was actually quite a bit better, so that's good news. Unemployment rate continues to fall.
The Fed doesn't have much room, though, if the hits the fan. The Fed's kind of out of tools, isn't it?
Yeah, I think the thing that worries me, if I was to point to anything in particular that worries me, is not that the Fed is out of tools, but they've waited too long to raise interest rates. We have basically not just the U.S. economy, because central banks globally, so not only U.S. Central Bank, Federal Reserve, but European Central Bank, and now China's central bank has, through monetary policy, lowering of interest rates, and in the case of China, devaluation of the currency, is stimulating their economy. And so it's like a global economy on steroids, and eventually there's going to be a withdrawal there at some point. And I think, and many commentators would agree that this low interest rate environment is really only delaying the punch. We really want to be in a healthy economy where we have some inflation, we have a bit higher interest rates, and ultimately what we want is for healthy companies to thrive and unhealthy companies to go out of business. That's the way capitalism works. Right now, because interest rates are where they are and these artificial supports are in place, you don't have some of that natural Darwinian aspect to the economy that we really depend on. So I think that's the bigger problem.
Yeah, I think that's a great analysis. Do we have the appetite for that Darwinian fallout? I mean, and what does it look like in terms of GDP and reporting and all that kind of thing? That's the thing that I wonder about, this thing that the Fed needs to do to kind of get us back into shape and separate the wheat from the chaff, so to speak, in terms of businesses that ought to succeed. What does that look like? Does it look like a recession inevitable, like a painful 18-month, two-year period of time? What does it feel like?
No, I think it actually looks much more healthy than that. I think what you see is better domestic growth ultimately. You see somewhat less stock market performance, less volatility, okay? And I think that is really what you're going for in that slightly higher interest rate.
A couple bucks more in your CD, maybe?
Sure. Well, yeah, for fixed income investors, it's even more attractive. Bank savers and things like that, absolutely.
Yeah, we come back. All right, what do you do when things get shaky? Stay with us. I still remember a day, 2007-ish, I guess, 2007. That's when the crash hit, right?
Yeah, October. Burned vividly into my memory.
I remember the day that I was driving home, calling the manager of my 401k, saying cash, and I'm talking to some guy in India, who's barely speaking English, saying, "You want to move everything to cash?" I'm like, no, don't move everything to cash. Just going forward, I'd like to be in cash for a little while. And he's like, "Okay, Mr. York, we move everything to cash." I'm like, no, I remember that day vividly. Thankfully, I worked it all out, and we're good. But if there was ever a time when people could doubt this theory you have, that over time it will grow, it was then.
Sure.
We were shaken to a core, absolutely shaken to a core. Now you look at the dough, and it's doubled and tripled.
Sure.
Again.
Hardest time of my career, no question about it.
Yeah? What was it like?
It questions your faith, because what you've been telling people forever is exactly what you said, that ultimately it's going to recover, and not only is it going to recover, but you're going to make more money. And what we saw was an event unlike what anybody would have ever predicted. So the storm was a lot worse. You can make the analogy to a hurricane, right? We're talking about Katrina and that anniversary, but you can make the analogy that the storm was a lot worse than anybody ever expected, but eventually we rebuilt and things got better, and I think that was definitely the case. But it does question your faith sometimes.
But also what it does, or did, where others are predicting doom and this is the beginning of a real rough ride, I think the fact that we came back from 2007 buoys a little bit of the panic that might have taken off here if we'd never had that kind of whack. And then we experienced what we did last Friday and then Monday. I think people might be really ringing your phones in panic. But most people have lived through that, and they've seen it come back. Right?
Certainly that experience helps modulate your risk tolerance. The more you've been involved in that's like that, the more you get used to it. But fundamentally, I always have to give a disclaimer to people, right? I'm essentially an economic optimist. If I wasn't an economic optimist, I'd be what I consider the other end of the spectrum, which is one of these survivalists on the shows you see where they buy automatic weapons and canned foods and they move to the mountains. You either believe that the country is going to be successful and the world is going to be successful as a society and we're going to profit through capitalism, or you think we're going to have a zombie apocalypse. And fundamentally, you go in one of those two directions. If you're the zombie apocalypse crowd, you're not going to hire a financial planner.
Isn't there a hedge and a hybrid of the two concepts?
Maybe a cabin in Vermont with some food and a handgun. I'm not sure. But ultimately, I'm not sure there is. You're either an optimist or you're a pessimist about the future of the society, and you invest based on that attitude.
Laura, can you pop up the notes on what you ought to be thinking about in a correction? First one, that's for everybody. As long as everybody doesn't, everybody's okay, right? First one.
Panicking is the worst thing you can do. I know it's an old axiom that losses are only real, once you sell, but the reality is that if you sell, that's the worst mistake you could have made because you're going to miss the recovery. And I think the people that sold in 2008 probably are the ones that regret their investments the most. So don't panic, don't do anything rash. That's never a good idea in any aspect of life. It's certainly not a good idea here.
And the second is consider your time horizon, meaning what?
I say this to people all the time. Look, if you had a daily ticker of what your home value is, you'd probably panic about that too. But the reality is you don't. And if you're not about to sell your home, it really doesn't matter what it's worth at that point. Very much the same for your investment portfolio. Unless you need all the money right this second, it doesn't matter that it's down. What matters is how much it's worth when you go to take the money out, and that's your time horizon, and that's what you got to focus on.
And third, what does that mean?
Well, this is for the not for the faint of heart, and that's basically looking at your portfolio and presuming it's a combination of stocks, bonds, and cash. Stock market's dipped pretty hard right now. Your combination of stock as a percentage of your portfolio is likely decreased relative to your bonds and cash. You may want to consider rebalancing, selling some of the bonds and cash to get your stock percentage up. Now, that's not for everybody, but that is a technique that over time will pay off.
All right. Well, ask Oliver about it. Money Pros is the program where you see this advice come every single week, 11:30 on Fox Providence. All right. What happens tomorrow?
That's a great question. I said at the beginning, we could have just gone to bed and pretended this week never happened. So it's going to go up or down, Dan. That's my prediction.
All right. Well, you should get a job in weather, too. That's kind of what they do. Good to see you, man. Thanks.
Thank you.
One more thought when we come back. Stay with us. I'm optimistic. I promise you I am. It was a shaky weekend, and I think it's going to be shaky for the fall, too. So hang in there on your market investments. Coming up on the program tomorrow night, for those of you who think it's just been one story told on Cranston Police Department and the State Police Report, Justin Katz, a conservative thinker and writer, comes and talks to us about how the state police may have overstepped themselves a little bit. That's tomorrow night on the show. See you on the radio at noon on WPRO. Bye.